Hi there and welcome to another episode of CryptoTime. My name's Antonio Shillingford and I'm here today with Stephen Ierotheou. How are you doing today? You well?
Yeah, very well. Yourself?
Good. Yeah, I can't complain. It's a Friday. There's been a lot of news coming out this week. Of course, we had the CoinGeek event that happened as well out in Korea, and it was interesting because there was a lot of development work happening, a lot of people building amazing products to help this space move forwards and really and truly take it to mainstream. But what we're going to be talking about today is a topic that we've been covering for a while now. And it's around the regulators and how the ICOs actually came about initially. So the fundraise that they done, of course, because we've been calling a lot of them securities because they are structured in that manner. And now the regulators are really starting to attack these companies, these coins, these tokens, organizations, however you want to label it. So without further ado, I know, of course, you've got a few really good talking points there. So would you like to kickstart us off?
Yeah, so as mentioned, today's topic is ICOs. And, while they were brilliant in exposing companies to capital markets, allowing them to get funding, they really didn't abide by the regulations of the countries they were actually conducting those ICOs in. And, one of the big ones that's popped up in the news recently is EOS. Now, EOS was developed by Block One. They had an ICO which lasted approximately a year. Roughly it started around the same time I actually joined the firm. I think they raised around $4 billion, right?
Yeah, around about that. So it's anywhere between 4 to 5 billion.
Yeah, I mean, that is massive. Considering at the time it was just a white paper, it was just an idea or a proposal or a pitch. There'd been zero development work done. So it raised a lot of money considering it was just an idea, almost like a seed investment.
It was really going off their sort of reputation, the reputation of the CTO, the projects that he previously built. So a lot of people had faith that he could build a new project that will outcompete what Ethereum is, because that is what EOS was really touting to start off with, being the new complete decentralized platform that can allow all of these decentralized applications. Because at that particular point, they actually introduced that at pretty much the perfect time, because that's when Ethereum was really struggling. It was really struggling to scale. That's when you had the situations like I can't remember the actual CryptoKitties, which was just quite simply a game where it was kind of like top trumps, and that staggered the Ethereum network just because of the volumes of how often people wanted to do transactions or just an action in general. So they introduced it at the perfect time. But what we were questioning was, first of all, why do you need to do a year-long ICO anyway? And also some of the players that were involved in it, one of them being Brock Pierce. And of course, a lot of information has come out against him, and we know that EOS kicked them out. But in terms of how they've been applying the fines to these different companies, if you would like to tuck into that.
Yeah, sure. So recently they were in the news and they were fined 24 million for conducting an unregistered ICO. So a few key takeaways from that is that a spokesman of the SEC publicly came out and actually characterized the EOS token as a security. Now that's massive news, because the way in which a lot of ICOs were done at the time was that there were pre-ICOs where, in essence, investors can get in on the asset dirt cheap relative to, the next tranche of investors. Now, in traditional markets, when you do that with an IPO, you have to be an accredited investor to get in at the very first tranche of funding. And accredited investors are defined as those who have a certain threshold of assets or have a total net income above a certain amount. So that was really interesting to see. But what we were sort of speaking of before this actual episode is, if you look at 24 million relative to the actual amount, Block One raised, it's so minute. And in my opinion, it simply sends out the wrong message. You're fining a company not even a fraction of what they raised. So it's almost like not even a slap on the wrist, and it just allows companies like EOS, Block One, to actually pursue development work without really facing the consequences of what they've actually done.
And this is sort of been an issue that has been going on even past cryptocurrencies, because if you look at banks and the fines that they get placed on top of them, and it's always been a situation where, for example, derivatives, the property market crash, that situation that came about. So derivatives market, they were basically labeling stuff that shouldn't be labeled AAA ratings. and they were selling it off to more than likely private pension funds, third parties, and this was the banks doing this. Yeah. So of course they're alleviating their risk straight away. So to them, it doesn't really matter what they're including in that supposedly AAA rating. Now, they are more than comfortable doing these things because they know all they're going to get is a slap on the wrist, and money that they make is going to be 10 times more than effectively what they're actually going to be fined. So if you're taking that into account, then these people are never going to stop these things. They're going to continue and continue and continue until we're at the point where we are really, really holding these individuals accountable. And just to bring a few of the other ones into the mix, just as a couple examples, Siacoin, which is a decentralized cloud storage platform, they got fined. And their fine, to be honest with you, it was actually more reasonable, not for Siacoin, but in terms of what they should have actually been really fined compared to what they raised. So Siacoin got fined $250,000. They didn't actually raise that much, so they really did feel the pinch of what the regulators have said. And the reason why they got the fine is the exact same thing, is because how they done the ICO. The ICO is structured as a security. Yeah. And that is what the regulators are really targeting. They're not targeting how the coin is actually structured itself and what the coin does. They're just targeting how the money was actually raised in the first place. Now, I do think that things are going to come into question later on down the line, because of course, if you are promising something to a community, saying that you're going to build this and you don't follow through with that, then of course there will be ramifications to that, especially if you've done a raise. But what they're focusing at the moment is just how that actual raise was done to start off with, which then leads us into what we was actually talking about literally just before this episode, was their year-long ICO that EOS done. Yeah. And how it was structured, the fact that it was going day by day. And the fact that it was going day by day, it was literally generating a new price every single day, meaning that it was going through discovery every single day, because what they were basically doing was a mini raise pretty much every day.
Yeah. And yeah, exactly on that point, the problem with doing something like that is a lot of people at the time were looking at market caps using comparative analysis, saying, well, EOS is just as good as Ethereum. It can surely reach that market cap. But the problem with doing a year-long ICO is that it leads to a massive increase in the price of value, which is completely unjustified. So on the first, they released roughly 2 million coins per day, right?
Yeah.
If you look at what happens when you do that, you're starting off with 2 million coins, right? And if you put that at a price of $10, for example, that means that your market cap is 20 million, right? But the next day, as the number of coins essentially doubles, the price would have to halve in order to maintain that market cap.
Yeah.
So what you sort of have is a massive overestimate of the price. And then when price actually retraces nearer to its truer value, it throws a lot of people off.
Yeah.
And yeah, I mean, the ICO market is full of problems. The massive misconception that people get is, oh, the ICO market's all about, people allowing them to get in on projects which are going to be, the Apple, Google, and Facebooks of tomorrow. But what you've got to really factor in is that, sure, the ICO market does provide you alternative means of funding capital, but you still have to abide by all the current regulation. Stuff like having, AML or KYC stuff, that is imperative in investing. And in my opinion, what the blockchain enables you to do is it enables you not to have so many different ICOs, but it allows you to tokenize your company. And by tokenizing your company, I mean legally IPOing on the blockchain. You still have the same underwriters like banks. The only difference is it allows you to take custody of your own assets. It allows you to transfer your own assets at ease and use your assets as you would at your own discretion, right? Yeah. Rather than calling a prime broker and saying, I'd like to move this, or can you send me my paperback shares? When I want to then sell them, I've got to then send them to my prime broker. It's a whole less efficient, right?
Yeah.
But blockchain basically allows you to interact with your own capital, your own assets in, unfringed upon. There's no constraints when you're using blockchain technology.
Yeah, I completely agree. And the thing is, what you were referring to in terms of AML KYC, that is where it's really up to the on and off ramps to really put in the proper processes, like we've done as a company, like a lot of other companies that we know of are also doing as well. End of the day, even though regulation is not in this space right now, you still need to be doing proper AML and KYC practices. For example, if someone is coming into this space, end of the day, you want to get involved in cryptocurrencies, they're saying it is a completely unregulated space, but there are still checks done on every single person that should be coming into the space. So if you want to get your fiat currency into cryptocurrency, there are going to be checks making sure that, of course, that fiat currency is legitimate and it's come from reliable sources. So all of those practices are still in place. And of course, companies that are doing so will be rewarded. Companies that aren't doing so will be penalized. And we're now really starting to see all of that play out. And just as a bit of another example, a Russian firm. So they pretty much just done, it was a ICO, it was called ICO ratings. And what they pretty much done is just listed a bunch of different ICOs, advertising them pretty much. And they also got fined by SEC. So their fine was $268,998. Don't ask me why they didn't just charge them 270, but that's what they had to pay. It's just another example. And I think you've got on your list there a few famous names. Yeah,
so people like Floyd Mayweather and DJ Khaled, they're also, and this is actually a really important point, they were also fined, but not for conducting ICOs in an inappropriate manner, but it's to do with the promotion of ICOs. They were actually paid by different ICOs in order to help promote them. So I think at the time, Floyd Mayweather put on his Instagram story, I've just bought £5 million worth of this ICO or $5 million worth. Make sure you get in type thing.
Yeah. Now, I actually remember that post as well. He had a little card. I think it was a debit card, wasn't it? Mm-hmm. That's what they were trying to pitch.
Yeah, and the problem with that is, one, he has no investment accolades, so why would anyone listen to him? It's simply false advertisement.
Yeah.
But he also didn't disclose that he was monetarily incentivized to actually promote that ICO.
Yeah.
And, it's until we actually breach these hurdles of false advertisements and, really conducting your offering in a fully compliant manner where you have to, market it in a compliant manner, which means that you can't market it to unaccredited investors, especially preliminary funding rounds. Mm-hmm. That's really a big constraint in the space, and that's what's holding us back massively.
Yeah, I completely agree. And I think that might be a good note to end it on, unless, of course, you want to have any other additions.
No, I think that's a great note to actually end it on, bearing in mind that the vast majority of, it's a shocking statistic, the vast majority of ICOs are yet to write 4 lines of code 1 year after actually launching their ICO. I remember reading that, in excess of 90% of them are yet to write 4 lines of code, yet they're raising hundreds of millions of dollars.
Just write a couple pages promising the community that you're going to do this, but then never action it because you've just been paid in full before you even put in any form of work.
Exactly.
All you got to do is just promise people. That is going to all completely change now and change for the better. So how it should be is you make a foundation, there is proof of work there. Then, of course, if you need extra funds to then push forward, then, of course, do your raise, but at least have a base and then build from that. But without further ado, I think we'll call that the end of the show. And of course, if you liked the content that you're viewing, please like and subscribe. You'll be able to view all of the links below on all of the different social media platforms that you'll be able to view the content. And until next time, peace and love.